For generations, the Middle East's destiny has been intertwined with a powerful pact: oil for security, with the US dollar at its very heart. This arrangement wasn't just a business deal, it was a grand bargain that shaped the modern world, influencing everything from the price of gasoline to the balance of global power. The Gulf states, especially Saudi Arabia, agreed to sell their vast oil reserves exclusively in dollars. This decision didn't just boost the dollar's status, it made it the undisputed king of global currencies, giving Washington a unique and far-reaching leverage over the world economy. In exchange, the United States offered military protection, deploying troops and advanced weaponry to safeguard the region's rulers and their oil fields. This security umbrella anchored the region's stability, deterring threats and ensuring the oil kept flowing. This arrangement didn't just shape the skylines of Riyadh and Doha, fueling a construction boom and dazzling displays of wealth. It also financed America's deficits as petrodollars cycled back into U.S. bonds and assets, and kept Western industries humming with a steady supply of energy. Gulf currencies were pegged to the dollar, forcing central banks to amass vast reserves of greenbacks. This reinforced the American financial system, making the dollar the backbone of international trade and investment, and tying the fortunes of the Gulf to the health of the U.S. economy. The petrodollar system created a closed loop of mutual benefit and deep interdependence. Oil money flowed into American markets, while U.S. security and technology flowed back to the Gulf, creating a cycle that seemed unbreakable. For decades, this was an unchallenged reality, a fundamental truth of global finance and geopolitics, shaping the destinies of nations and the lives of billions. But the world is shifting. New economic powers have emerged in Asia, global supply chains have been redrawn, and the certainties of the past are beginning to unravel. The rise of China and India, the push for energy diversification, and the digital revolution are all rewriting the rules. The U.S. Gulf Partnership, once rock solid, now faces new pressures. Gulf leaders are forging fresh alliances, exploring partnerships with China, Russia, and other rising powers, as they seek to diversify both their economies and their diplomatic ties. The once stable dance with the dollar is faltering. Gulf states are now eyeing new partners, experimenting with alternative currencies, and hedging their bets in a world where American dominance is no longer guaranteed. The music is changing, and a new rhythm is emerging from the East. Asian financial centers are rising, and the Gulf is listening closely to the new beat, eager to adapt and thrive in a multipolar world. The era of unquestioned American influence is drawing to a close. The Gulf is weighing its options, aware that the next steps will shape its future for generations. The Gulf is searching for a new choreography, one that reflects today's complex, interconnected, and multipolar world. The old steps no longer fit the new music. The question now is clear: who will lead the next dance, and what will the new rhythm of global power sound like? The Gulf's pivot east is unmistakable. Saudi Arabia and the UAE joined BRICS in 2024, signaling a break from exclusive Western alignment. BRICS offers a seat at a new global table, amplifying the voices of the global south and connecting the Gulf to booming Asian economies. China is now the Gulf's top trading partner and oil customer, shifting economic gravity eastward. The mantra has changed from "follow the security" to "follow the money." And that money leads to Beijing and New Delhi. Vision 2030 and Qatar's global ambitions require investment and technology which BRICS partners can provide. Membership in BRICS opens new avenues for cooperation, investment, and influence. The Gulf is no longer content to be a junior partner, it's writing its own future. The era of Western dominance is giving way to a multipolar reality. The petrodollar's grip is loosening. For nearly 5 decades, the global oil trade has been dominated by the US dollar, cementing America's economic influence and giving it unparalleled leverage over international finance. But now, the world is witnessing a historic shift. Saudi Arabia and China are negotiating oil sales in Yuan, a direct challenge to dollar supremacy. This move signals a willingness to break with tradition and reshape the rules of global commerce. For China, paying in yuan reduces risk and advances its goal of making the yuan a global reserve currency. It also shields Chinese companies from currency fluctuations and potential U.S. financial pressure. For the Gulf, accepting yuan deepens ties with their biggest customer and offers strategic independence. It allows Gulf states to diversify their economic partnerships and hedge against future uncertainty. Yuan-denominated oil futures and investments in China create a powerful economic loop, bypassing the U.S. financial system. This new system could eventually draw in other countries seeking alternatives to the dollar. This shift is a break from the past, driven by frustration with US sanctions and a desire for financial sovereignty. Many nations are weary of the dollar's dominance being used as a tool of political pressure. Diversifying trade currencies reduces vulnerability to American policy. It gives countries more control over their own economic destinies and lessens the impact of external shocks. The dollar's reign isn't over, but its exclusive hold on oil is broken. The world is moving toward a multipolar currency system where several currencies share influence. The yuan is now a contender in the energy trade. Its growing role could reshape global finance and shift the balance of power in the decades ahead. The global financial order is becoming more complex and competitive. Nations are adapting to a new reality where economic power is more widely distributed. America must now compete for influence, not command it. The era of unquestioned dollar dominance is giving way to a world where financial alliances are constantly shifting, and the future of global trade is up for grabs. China's influence in the Gulf is visible in steel and glass, not just currency. Across the region, the fingerprints of Chinese ambition are etched into the very skylines of cities that are rapidly transforming before our eyes. From the soaring towers of Riyadh to the futuristic silhouettes of Doha and Dubai, China's presence is unmistakable, shaping the Gulf's urban identity. Chinese firms are key partners in Saudi Arabia's Vision 2030, building mega projects like NEOM and investing in ports, industry, and renewables. Their expertise and capital are helping to turn ambitious blueprints into reality, with Chinese engineers and technology at the heart of these massive undertakings. The collaboration extends to smart cities, green energy, and advanced infrastructure, signaling a new era of development. Saudi Aramco is expanding into China, creating a two-way flow of capital and energy. This partnership is not just about oil, it's about building a long-term economic bridge, with joint ventures and investments that bind the two economies together more closely than ever before. In Qatar, China is a major player in the North Field gas expansion and has secured massive LNG deals. These agreements guarantee energy security for China while providing Qatar with a reliable long-term customer, deepening ties between the two nations. The partnership extends beyond trade. Joint military exercises signal deepening trust. Security cooperation is growing, with both sides eager to demonstrate their commitment to regional stability and mutual defense. China's approach is pragmatic: heavy investment, no political strings, and respect for sovereignty. This strategy allows Gulf states to modernize on their own terms, without external interference or pressure to adopt foreign values. This model appeals to Gulf leaders weary of Western lectures and shifting U.S. policies. For many, China offers a partnership based on mutual benefit and respect, rather than conditional alliances. China isn't exporting ideology, it's building markets and securing resources. The focus is on commerce, connectivity, and creating new opportunities for growth, not on reshaping societies or politics. Western influence is being quietly displaced, one contract at a time. As Chinese companies sign new deals and invest in critical sectors, the balance of power in the Gulf is subtly but steadily shifting eastward. The Gulf's future is being built with Chinese BRICS and ambition, as the region's leaders look east for partnership, progress, and prosperity in a rapidly changing world. Amid the pivot east, the Gulf is reviving a bold idea: a unified GCC currency. 7 member states are working to create a monetary union that could rival the euro and reduce reliance on the dollar. The goal is economic sovereignty and insulation from U.S. political pressure. Technical preparations are underway, merging central banks, integrating payment systems, and aligning policies. The political climate is ripe, driven by a shared desire to de-dollarize. A successful Gulf currency would be a global game-changer, offering a new reserve option and pricing tool for energy. The Gulf aims to become an economic pole, not just a partner. America's influence in the Middle East is fading, eroded by strategic missteps and shifting priorities. The U.S. pivot to Asia left Gulf allies feeling exposed and uncertain about American security guarantees. Recent conflicts and unwavering U.S. support for Israel have deepened mistrust across the Arab world. Into this vacuum steps China, not as a military power but as a peacemaker and economic partner. Beijing's brokering of Saudi-Iran ties in 2023 showcased a new model: diplomacy and economic incentives over military threats. Gulf states now see China as a stabilizer, while America is viewed as a source of instability. The old oil for security pact is fraying. New alliances are forming. The strategic map of the Middle East is being redrawn before our eyes. The shift from the dollar is fraught with challenges. Gulf currencies are pegged to the dollar, making yuan trade risky and introducing volatility. Depegging would be a seismic move requiring a complete overhaul of monetary policy. The yuan's global utility is limited. It's not as convertible or widely accepted as the dollar. Dollars are easy to spend and invest worldwide. Yuan is not, yet. Breaking the dollar's dominance requires building a parallel financial ecosystem, which will take time. The network effects of the dollar are powerful and entrenched. The transition to a multipolar currency world will be gradual and complex, not a sudden revolution. The Middle East is redrawing its map of alliances and influence. The era of American security and petrodollar supremacy is ending. Gulf states are pivoting east, joining BRICS and trading oil in yuan. China is now a foundational partner, investing in the Gulf's post-oil future. The push for a unified GCC currency signals a quest for autonomy. America's presence is waning, its leverage diminished. The transition to a multipolar world is underway, complex, turbulent, but inevitable. A new world is emerging, one that speaks many languages and trades in many currencies.